Thank you, everybody. And it's it's awesome to hear all these stories because I'm out lots of times evangelizing BSV and blockchain and talking about these companies' applications. And it's times like these I realize what a poor job I do compared to the founders of these companies. It's just so excellent to hear this all out front. And some of this data you're going to see before, but what I want to share you the story about TAAL and what we're trying to do. But we're really in the middle of all this stuff, and we're privileged to see the work that's going on with these kind of companies and so many more others out there that are doing a tremendous job. And this summer has particularly been gratifying, not just because we're seeing bigger blocks, but it's becoming more and more evident. As you know, there's a lot of controversy around blockchains and different protocols, and this is the third time I've been in a protocol war. The first time was in wireless, and I was at things just like this, small conferences that grew into massive conferences in Las Vegas, and we had TDMA and GSM and CDMA, and everybody hated each other, and they all just trash talked each other's protocol, and then eventually we kind of picked one, and everyone's forgotten about it. The next time was, I had an internet company, and I go to investor meetings and I talk about internet protocol and how we're going to use it for all these different things. And they said, well, frame relay will never be displaced from enterprise, and government and international is token ring, and this protocol will not work. And well, here we are a few years later, and we don't think about it. And I think we're in the exact same thing right now. And the evidence of the size of the chain, the size of the transactions, the speed, the cost, eventually, I think cooler heads have to prevail here and say, guys, this is the one. Like, it's doing all this stuff. Like, what is your empirical, factual argument against the fact that this is really working? And yeah, we've got kind of a concentration of applications that are putting up a lot of the data right now. But to me, that's a really great thing, right? Like, if we're doing this much with a handful of applications, like, just think what we're doing when EHR is lighting up. Like, they're not even sending me transactions yet. He's already chiseling me on the price. Like, he's it's like, well, we need much lower fees. It's like it's very close to free already. But I'll work with you on that. So what we're really trying to do at TAAL is we're trying to build the tools and the services that make it easier for all these applications to come online. So, today you get the basics. Like, we are iPhone 1, but, we're working on a whole bunch of stuff, and I'll share with you, things that we're working on analytics, things that we're working on storage, tokenization, all that's coming because, just simply building blocks is not going to be the future of our company. It's not the future of our industry. We have to do a lot more. And we also, I think you guys are going to expect 24-hour customer service and multiple languages and like all kinds of help and things that are going to go on so that it's not a phone ringing in the middle of the night. We talk a lot about, putting stuff on chain and some of the stuff I've heard so far this morning about verification and all that sort of stuff, like, we want to read this stuff too. And so it's not only the blocks that are going up, but this comes right off of what's on chain. 76 million API requests in July and August, like, just incredible numbers. And so far in September, it's looking even bigger still. So what's that telling us? The previous slide says there's a whole bunch of data going on the chain. This one's saying there's a whole bunch of requests to read that stuff coming off of it. And that's really, really, really important to us. So with our analytics stuff that we're working on now, we're going to provide you all kinds of more data in all kinds of more formats. And it won't be in some sort of proprietary way that you have to read it from us or pay us a special fee. It'll be, exported into BI or Tableau or whatever your application is. It's going to be really, really simple. We're going to ask you to pay us for it because it's going to be in such a service format that's really amazing. And it's going to be useful to you, so you'll be happy to pay us for that too. But that's the kind of stuff that we're working on the analytics side. So we're now just under 60 people. We're in 10 countries. And I think we've got 16 open developer and engineering spots. So if you know anybody, please send them our way. We will pay a finder's fee for that. So this is kind of where we play. We play in this part where we're trying to make it super easy for you to send us your data. So whether that be through the open pool or through our Mappy product, and there's all kinds of benefits and ways that makes it easy. We'll process that. We'll give you service level agreements. We'll make it simple for everybody to operate. And we haven't got all this figured out yet, but we've got a lot of it figured out. It's starting to work. And then on the back end of that is going to be the analytical piece. And that's what we're going to work on, because I think that kind of big data part of the business has become really, really interesting in the future, and we're working very, very hard on that. This slide you've already seen. I think I stole it from Jimmy's deck, but it's we keep harping on these things, and it's really, really important because we're starting to see applications that are becoming massive amounts of volume. I think in just the talks we've heard this morning, we're starting to think about trillions of transactions over time. Like that's where we got to go. And right now, I think all the evidence is and all the confidence shows that we can get there. And so this is what we do. We evangelize this with customers, with enterprise, with regulators, and of course investors, because we need more than just us to believe all this stuff. We need a broader group, and I encourage you all to invite friends and everything to CoinGeek in New York in October, so we can do that. The top one is transactions just this year, and what you can see on the far right side on the top chart is transactions for August. I can show anybody who wants to see it. It's all Power BI. Works on my phone. I can show you the transactions for September, and we're trending for another really great month here. So the trend is our friend. No one's saying it's permanent. There's probably going to be some fluctuations, but it's really cool. August in transaction fees. That's the actual amount of fees that we earned for processing data in the month of August. So 1,246 BSV. So that's in excess of what the company's earned in the history of the company. Still a modest number, a couple $100,000, but absolutely going in the right direction. And within that, there were several times during the month where the transaction fee was in excess of the reward fee, and people put us in that kind of minor category. I think we're in the cloud computing category. That's the category I think we fit into. We kind of model ourselves after cloud computing. We think about our business that way. We think about customer service levels and SLAs. That's how we think about it, because this is the future for blockchain. The other miners out there, I don't know what their plan is. I think the plan is like, well, Bitcoin will go up, and therefore I'll be able to still be in business in 3 years' time. And that might work. I hope it does. They're all going to come over, that. That's why we're buying so many computers. Like they're all going to show up one morning and try to eat our lunch, and we're just not going to let it happen. And the other thing that happens, we start to see transactions overtake Ethereum. Some days less, some days more, but consistently we're doing more transactions than Ethereum. This is under one of these kind of factual pieces, like this bit of evidence to say, guys, there's more data here. There's more transactions. There's more things happening, and it's happening at a fraction of the cost. So if it's faster, cheaper, and better, a lot of times that attracts other developers and other programs, and if their only source of evidence of what's going on in our industry is Twitter, then maybe they don't belong here anyways. So a little bit about TAAL. We are a public company. I think we're one of the very few public companies in BSV. We welcome many more of these great applications to join us in the public markets. But so with part of that is like just so much evangelizing what we're doing. It's very hard to talk to the average investor and make them understand, like even the portfolio manager, like what we're really trying to do here. But we're privileged to have amazing support. We've got some institutional investors now. We're still over 50% insider owned. We only have 36 million shares outstanding. We do trade on the stock exchange, not every day. Some days we take a day off. We don't trade. Because our float is about 8 million shares, so there's just not a lot to trade out there. And my job was in part to like diversify our shareholder base. I've been here 11 months, and it's concentrated more. Like we've got a couple big investors. It's even more concentrated than when I started. So we'll work through that. We reported our June quarter. We did $6.7 million. That was compared to $900,000 in the first quarter, and compared to the square root of zero in the quarter before that. We do have some very savvy guys that use our own tools to figure out what our revenue is. So from what's on chain, if you just pull the API, you can figure out how many blocks you want. You can figure out the transaction fees. You can figure out everything. And so all the guys was, so I have you between 10.2 million and 10.25. Like, they'll have the exact number, and they're right on. They're bang on these numbers. So what we're going to do in our next version of our website is we're going to just put those numbers right up on the website on a daily basis. Like, the information's there. We'll just make it even for everybody. So we're going to grow compared to last quarter. We're going to grow another 30% or so in Q3 and keep going in Q4. And I don't harp on that because of, I think the stock's super cheap, which it is. But because as the company gets bigger and we start to show actual real revenues, it broadens out the interest from the greater investor community, which is good for everybody, right? That brings dollars into our community, and that's really, really important, I think. So with that, we've standardized on BSV. We are a cheerleader. We're 100% in. We don't have a plan B. It's all about BSV and helping companies get those transactions online. As I promise, all the companies that we deal with is like, for me, if there's ever a problem or something that we can do, come to me because I can help, because I'm not technical. I don't really know how any of this stuff works. So I can help sort out problems, because sometimes people get siloed and we get into a rut, but we can make proper business decisions. So we're making money through revenue, through transactions, and in the June quarter we held 100,000 BSV in balance sheet as well. And we're not doing that because we think BSV is going to go up, although I do think eventually it will go up. But part of that is our tokenization program called STAAS. And so these tokens are useful. Like, there's 100 million Satoshis in every Bitcoin. And when we tokenize right on that native token, that token becomes very, very valuable. There's lots that we can do with it. So I did a little bit of fun with math. Let's just say that we take our inventory, the 100,000 BSV that we have, and we have smart customers like you guys that are tokenizing and using our STAAS protocol. And we do one transaction a year. Here, I got to go back for a second to just figure out what the math is. We do one transaction a year with each token. So that would be, at these levels, $7.4 billion top line revenue for TAAL. That's why the stock's cheap. That's why you're nodding. I can see it right now.
Thank you, Chris. Give him a round of applause. So you mentioned that you're treating blockchain and data more like cloud storage. I want to dig into that really briefly because I think it's important for the audience to understand. The people call what you do now mining. It's because there's an early Satoshi post which talked about the winning node that solves the algorithm to form the next block gets awarded Bitcoin. Fresh coins from this 21 million fixed supply of Bitcoin, right? And beginning with 50 coins per block, and then every about 4 years it cuts in half, 25 to 12.5, now it's 6.25 coins. That's what we call this fixed subsidy amount. It was Satoshi's design to be able to gradually push into circulation fresh coins from this 21 million. But over time, especially in about 100 years, that will run out. Right, and over the next halvening, it increasingly gets dramatically less. Right, the next halvening will be like 3.1 whatever coins for every block. And Satoshi always designed this system where it was intended for transaction volume to increase, so that the node who adds the block to the chain earns less in this fixed amount of the subsidy amount from the fresh coins, but more, an increasing amount from the transaction fees paid by us users of the network from not fresh coins, coins that are already out in the marketplace. And so that's why they called it mining in the first place. It's like you're mining coins out of this 21 million supply of fresh ones, like digging gold out of the ground. But then once gold is out of the ground, people use it to make coins and spend money, at least they used to, right? So we are seeing with what we're trying to do with BSV scale to handle all this transaction capacity, a change from mining to, as we've described, processing transactions and getting paid more and more of your revenue from the transaction fee, not from the fresh coins that come out. And so I want to explain that for everyone that asked this question. So you're setting up now to provide companies like EHR Data more of a service, whereas in the old days, miners would take, if you send a transaction on the chain, whatever the fee would be, could be just whatever's depending on how congested the network is, right? And you would broadcast the transactions to the public mempool, right? And then whatever miner got them with each next block. You're changing how that works. Describe how you're changing how that works and why businesses should care that are generating large transactions.
Well, I think it's enterprise is accustomed to data services in a certain format, Amazon Web Services, Azure, even if from a merchant side like Shopify, like they're used to consuming this data in a certain way. And we think that just plain vanilla transactions is certainly not the future. And this is not because we're smart guys and we're sitting in our room thinking about this. It's because all of you keep telling us what you want, and we're listening very carefully. You want a service level agreement. You need to know what your fees are going to be. There's all kinds of other things that you would like to do. We've talked about storage, on and off chain storage, and that can take a bunch of different formats, and that's stuff that you want to do. You want to store it in your own environment. You might want to store it on Amazon S3. Like there's lots of things that you might want to do, and you want to simplify how you do that. You want to simplify how you pay for that, and measure it, and have all that data, available for any sort of analytical use, whether it be through your own enterprise or through your customers. So that's how we're thinking about it. And as we kind of have a handful of applications now, we've got to start thinking about, what does it look like with 1,000? What does it look like with 10,000? What does it look like with 100,000 clients? That's the kind of company we're trying to build.
So basically, an EHR data wouldn't just say, oh, let me send my transactions out to the whole network. They'll enter into an agreement with TAAL to say, we'll send all of our data transactions to you. Mm-hmm. You take care of getting them onto the blockchain, which means you might mine them or record them to the chain yourself, or if you can't do it in the amount of time, because it depends on which blocks you hit. You don't know, right? It could be the next block, 10 blocks,
we'll incentivize.
Or you could relay them onto other miners. But you take on the responsibility to say, I will get all your transactions on chain within whatever you agree to, a day, 24 hours, depending on the urgency of the data, for this amount of money, this fee depended on this anticipated transaction volume. You expect whatever, 2 million transactions a day, I'll guarantee it's gonna be this amount within 24 hours.
Yeah.
And then if you don't meet those service levels, then you credit them back. Mm-hmm. Kind of like a service level agreement in the normal tech space or in cloud service. So it's reinventing what the mining world is to really how big businesses want to deal with their data from a business perspective. So it's something that unique is happening in the BSV world that we don't see in other blockchains, because they're not focused as much on this sort of data use of the chain at these big levels. So I think you're a leader in the space in trying to do that.
I like when you give my presentation for me.
Yeah,
it's nice.
Yeah. I can do everyone's presentation here for them. Okay, yes, Paul, question.
I'll be fascinated to hear what PMs say, portfolio managers say, when you explain to them all this stuff that you and Jimmy just talked about, but in particular that the other miners they cover that are public companies as well, that they're BTC, some Ethereum as well, but those that are BTC focused, the reward is essentially gone in 10 years. Like it goes over 100 years, but in 10 years it's almost nothing.
Okay.
What do they say when you explain to them that part?
Yeah, let me repeat the question for people who didn't hear. He's curious to know what portfolio managers, who Chris talks to, say when they hear all of this information about the importance of the rise of transaction fee revenue and compare it to other public company miners that are out there. There's other public companies that mine and are mining BTC or Ethereum, and in 10 years the fixed amount of the subsidy or block reward will go away or be dramatically reduced.
Yeah, I think, they've done a great job in controlling the narrative, and there is BTC and then there's nothing else. Like maybe you'll hear about Ethereum once in a while, but it's BTC and nothing else. And the narrative is, I've got 1 exahash. Hold on a second. I've got 1.4 exahash. Yeah. I'm a better miner because I've got 1.6 exahash. Okay, you're the best. And then Marathon announced yesterday that they're going to double it again and they're going to increase the hash rate. But when pressed on, how does the business work? It's, well, Bitcoin has to go up, and this is how our exposure to Bitcoin. So what if Bitcoin goes down? Well, then we have no business. Our business is not dependent on the price of BSV. Like it's really super nice when it trades up, but it's not. I'm not dependent on that.
Because you're getting paid transaction fees.
Because I'm building towards that. We've been able to grow EBITDA positive for the last couple of quarters because price has been reasonably favorable. Like these levels, 150, 175, like we make gobs. We make gobs at this level.
Yeah, and of course, if the BSV price rises up, as many of us hope it does and believe it will, then you do really well. But you're planning a business model that's not dependent on it.
That's right. I think there was one in the back.
Okay, yeah, there's a question. Yes, this gentleman.
Quick question on that. Do you hedge that BSV exposure at all?
No.
So you're just kind of, you don't have a fiduciary duty to your shareholders to
No.
hedge that exposure?
You go and hedge your exposure to TAAL if you want to. I'm a pure play. I'm all in. I am in the deep
And you
end
make
of
that
the
clear, and you make
Yeah.
that clear to shareholders.
No, I'm not diversifying my risk. I am like, this is it. We are all in. If you want to hedge out, you go hedge out.
Yes.
Yeah, so you mentioned that, you've got about 65,000 transactions that can happen on the TAAL integrated software system, and this is for 2021. Has it already launched? Have you compromised a little bit on the decentralization aspect or the security aspect by making it more centralized? Could you give us a scalability?
The question, if I can summarize it, is okay. We're projecting large transaction volume on chain, like 60,000, transactions per second. Does that come at a cost of centralization or security?
Yeah, so I get that question a lot. So this notion of decentralization, which is kind of like a thematic part of that whole DeFi argument, so we host almost all of our web applications with Amazon. I don't think about every day as like, oh, I'm going to go and I'm going to hire 5 more web hosting providers for those applications because I want to diversify my risk. It's like, no, I've got a SLA with this company that's amazing. The tools are amazing. The customer service is amazing. The price is great. I give Amazon all my web business. So where this decentralization comes into play, it doesn't really. It's not a focus for us for the applications that we're trying to run, and we know the other miners are going to show up one day. That's why we have so much power now, and we're constantly adding to it.
Let me address that. I get this question a lot as well. The definition of centralization in the Bitcoin community has completely been bastardized, in my view. It does not take significantly more hardware in terms of cost or technical costs to mine big blocks. You do need heightened memory, right, on your node. So you do have to spend a bit more on memory for your node, and there are some technical improvements that have to be made. But the cost to mine a 2 gigabyte block is not much of any different than mining a 1 megabyte block on the BSV network. Where people believe that big block scaling leads to more centralization is the idea that the home person, who originally were the original Bitcoin miners, can't run a node effectively to mine and compete effectively on their home computers. And so on the BTC network, they try to keep track of nodes by saying, look at all these people running instances of the BTC software. There are a lot of people running home versions to track, to listen to the blockchain, but they're actually not competing to win blocks and add blocks to the chain, which in our view is not really a node on the network. If you read the Bitcoin white paper, the nodes are the ones who are actually adding transactions to the chain. So having our big block approach does mean that it is impractical for all of us at home to be trying to run a competing node, or it will cost more to maintain the whole blockchain on our home computers. That doesn't, in our view, lead to more centralization of the number of people, companies really, who will compete effectively to mine or validate transactions on the chain. So it's a completely different way of thinking what centralization is. It doesn't affect the number of players competing to add transactions to the chain. It affects the cost of all of us at home running our own nodes. But the answer I have to that is Bitcoin wasn't designed for all of us to maintain the entire blockchain on our own personal computing devices. It has a concept in the white paper called simplified payment verification, which basically creates a different wallet system architecture where you don't have to keep all the transactions of the blockchain. You keep headers that are more related to you in simple form. I think about it as my email box on my computer does not have all of the world's emails. It only has the emails that are relevant to me. So you keep a smaller size.
There's been one very patient in the back here.
We'll take another question.
Oh,
Hi,
Sean.
I guess can you just walk us through the events over the past quarter that transpired that kind of took your market share up to 90% of blocks mined today? I think as we're having this conversation, your market share is down closer to 40, and it ties into all of Jim's comments just now on centralization.
Yeah.
But I guess as you think about it, what is the right market share?
So,
Just given the optics,
Okay.
when you
Yeah.
come in your 90, I can appreciate why the outside looking in deem it
Sure.
centralized.
Yeah. So the question's about how to address TAAL's by market share. I assume you mean hash rate, percentage of the network hash rate. That it's been very high sometimes in the network, and then it's now I think around 40 or so percent, but it's been much higher, more than 50% in the past. How would you address concerns about that?
Yeah, well, you said it this morning, the word honest, like we're an honest miner. So we don't worry about it that much, honestly. For me and the kind of services that we provide to clients, I don't hear it as a big problem for most of them. We're not issuing tokens and having some sort of currency or anything like that. We don't do any of that. We're a cloud computing company. But it's a narrative that's very, very strong, from BTC, and it's something that we have to talk about and something that we have to acknowledge.
Sure.
and try to educate on. And Sean, I know that economics typically win out over behavior, and certainly with public miners, and they start seeing more money being made. Like,
We think they'll come. Yeah.
they will come, and I can tell you with conversations I'm having right now, because we want them to come. We do want them to come because we want to support the volumes for everybody. They are going to come, and they, the first couple, I think we'll start an avalanche of that, and it'll be our onus to be able to have a reasonable cost of capital to go and continue to build out our network and offer all those services.
Yeah.
And there's also some of our services are being designed that you could be, doesn't have to be mined by us. If our storage, our analytics, and all that other stuff doesn't necessarily have to be mined by TAAL.
Yeah, I think technically it doesn't matter, but optically people care about it. And what I would say is the mining system has been designed by Satoshi, it's described in the white paper, for nodes to come and go from the network as they want, at will. And there are times where other miners come on to BSV and they leave. There have been times early this year when the Hathor merge mining pool had way more than 50% of the network, and you guys were down to 20, 25%. So it changes on any given day, but we recognize that people have that as an optics question.
I guess like specifically, last week I saw 1.4 gigabyte block.
Mm-hmm.
In that specific instance that we referenced earlier, your transaction exceeded
Yep.
6.25 multiplied by
Right.
155 or
Mhm.
whatever it was at the time. So outside of tweeting it, what else goes on behind the scenes at TAAL, N-Chain, or so forth to educate everybody? Hey, there's a business here in February 2024
Sure.
when Block Reward goes to.
Yeah. We've been doing that more aggressively in the last few months, but we were just kicking off another miner education program where I have someone on my team who is tasked with overseeing communications with all the known mining pools that currently mine on BSV and that we think might mine on BSV. In fact, we just sent them advisory about how to better set up their systems for mining big blocks and are planning a webinar with them over the coming weeks to explain all this. All right. We are definitely over, but thank you so much. Lots of questions for Chris. He'll be here all day. I know it's a very fascinating topic.